Cisco shares moving higher after hours, about 5% there, and that's after reporting first quarter earnings. Joining us now is Keith Snyder, CFRA Research Senior Equity Analyst. So, Keith, what did you like most? What stood out to you in this earnings report?
I mean, it's really good for them to see, a beat and raise, especially following the April quarter. So 2 quarters ago, earnings were pretty bad. And it seemed like they were struggling a lot with just everything going on in the world. You have the Russian-Ukraine war. You have incredibly strong demand, but just an inability to get the supply you need. And so coming into this quarter, what we were really looking for was, demand was there based on what competitors were saying. So Arista, Juniper, demand is very strong, but it's less going to be a function of how the sales team did as opposed to how your supply acquisition team does. And so it seems like they came through this quarter and were able to get what they need to ship products, because then that, trickles down into software revenue and, everything else in their backlog coming in. We had a record backlog level, and really they did what we think is an incredible job, but we'll see when they have more commentary on the conference call.
Yeah, Keith, in this report, CEO Chuck Robbins saying that fiscal 2023 off to a great start. I think we see that reflected in the guidance that you were just referencing, with the full year revenue guidance now expected to be 4.5% to 6.5% growth. When we take a look at some of the issues, some of the challenges, I should say, that the company has faced, of course, supply chain problems, the stronger dollar, decelerating enterprise spending. Do you think some of those risks have been a bit overblown, at least when it comes to Cisco?
Yeah, I mean, I would say at least from the decelerating enterprise growth, that's a little bit overblown. But the supply chain issues are very real. I mean, they're having a lot of problems getting one or two components just to finish off an item. And so that's really been an issue for them. But coming into this quarter, we thought, as long as they can get those items and start shipping product again, that's going to be huge for them. And it seems like they've been able to do that. And then, just you have so many tailwinds. From Wi-Fi 6 upgrade, you have 5G, you have the 400 gig Ethernet switch network upgrade cycle. A lot of these trends are in the very early innings. And so these are all going to drive demand going forward.
Keith, you mentioned that we still have some supply chain issues when it comes to Cisco. I guess, how long do you see some of these effects lingering for?
I mean, it's tough to know. So we're hoping we've seen a light at the end of the tunnel. But with that said, we thought that last quarter, we thought that the quarter before. It's going to be, when we get their commentary, we'll see. But we're hoping we are coming out of the problem rather than, continuing where we've been for really the last 4 or 5 quarters.
And we did see that CEO Chuck Robbins called this the largest quarterly revenue and second highest quarterly non-GAAP earnings per share in our history. What is Cisco doing better than its competitors right now?
I mean, their backlog's at incredibly high levels. So again, it was really just shipping products out. And so it became whether or not they could ship. Beyond that, they have such strong ties with the cloud titans, the large customers. Demand is very, very strong for them. And they've been executing very well for the last 2.5, 3 years in terms of catching up with competitors on the software front, on the more a la carte, services that they offer with their hardware, as opposed to a very locked down hardware ecosystem. And so all of those strides that they've made have really started to show up. And, as I said before, now that they're able to actually ship product out, the results are showing. And given their backlog levels, we don't expect that to subside really anytime soon.
Keith, shares were under pressure ahead of this report over the last couple of days on some speculation that maybe Cisco is long overdue for a significant acquisition. What are your thoughts on that? And I guess, do you see more M&A in the pipeline potentially?
I mean, when it comes to Cisco, I always see more M&A, just given how much cash they have on the balance sheet, their debt levels. They're in an incredibly good position to continue to acquire companies. It's really, who's out there that's trading at a reasonable multiple right now, who has a technology that Cisco would really want. In terms of major M&A activity, I'm not sure we're going to really see that. Their bread and butter has been small tuck-in acquisitions that they then roll into their products and really extract the value from. So, where they're positioned right now, we think is excellent. And so I think it's just going to be little bolt-ons here and there going forward.
All right, Keith Snyder, great to have you. Thanks so much for hopping on right after these earnings breaks. We really appreciate it.